Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, and three trades. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer. But let's talk about Royal Caribbean. It's up more than 40% year to date. A big part of that move has happened recently. So tell us how you're approaching this from here.
And absolutely, and sorry about that. Big picture, I think vol is too low. RCL, Royal Caribbean, stock has just rallied too far, too fast. Like you just said, it's up 40% just in the last month. It's up about 50% in the last 6 months. It's extremely overbought. Their earnings weren't that great when they came out with them. So I just think this stock has come way too far, way too fast. So what I'm doing is I'm just looking for it to cool off a little bit. I'm buying the August expiration, 320, 300 put spread, pay about $4 for that. That gives me really good reward to risk. And it's not that I'm, necessarily so bearish on RCL, though I do think consumers are going to be pulling back on luxury expenses like that. I think this is just a really good opportunity for, the stock to normalize a little bit.
Okay. All right. So, Rick, take us through the chart and what you notice about it.
Yeah, a strong move to the upside here, and one that really took off once we rose above a certain point here. This green line near 277 represents our old high point on our chart here. From there, we did experience a bit of a drawdown here, bottoming out like so many other stocks during the tariff news announcements in April. From there, though, a rather narrow, tight, upward sloping channel between our two white dashed lines. Take a trend line, conventionally draw it across the lows, duplicate it, put it across the highs that happen to match up fairly well and give you some potential boundaries to keep an eye on. However, we broke out to the upside, making new highs even today. So the problem is, though, as Scott said, we are quite overbought according to the according to the RSI, 81 almost is where we're at now, so very elevated. It only goes from 0 to 100. The other problem is that we're seeing bearish divergence here. Price is trying to make a new close. RSI is actually trending downward here. So not necessarily a sign of impending doom or collapse or anything, but as Scott was saying, kind of a signal perhaps that we could be due for some consolidation or pullback given how swift this rally has been. So volume nodes here and here, pretty small ones though. These are kind of just speed bumps if we were to move to the downside. But nevertheless, around 335 and around 310 or so. Scott's area that he mentioned, 320 to 300, that's about this square right there. So that would be the where this trade would be in particular looking to capture. Beyond that, though, 277, that's ultimately a major supportive area based on those old highs and the breakout point.
Okay. Well, I mean, some would argue that the demand is still there, that people are still cruising, and when they cruise, they opt for Royal Caribbean over the others, say Carnival or Norwegian, and to outperform those. But like you said, Scott, you point out the momentum it's had recently could be due for a pullback. Any final thoughts you want to leave us with on Royal Caribbean?
No, I mean, it's really, I think, an opportunity to short something that is extended. Again, I'm not looking for a big collapse here, but just a little bit of a pullback.
Okay, a little bit of a pullback potentially. Let's move on to your next trade. You've got AST SpaceMobile next up. That one, I mean, that's been a huge outperformer compared to the S&P 500. So feels like this is all about, all the parts around the space race. What's your view on where this goes, Scott?
It is. There's a lot of momentum in this sector, and especially in this stock here. So I think the stock is going to break out to new highs before earnings. Earnings are on August 15th, 3-4 weeks away or so. So what I'm looking to do is put on a call spread prior to earnings because I don't want to have that affecting my position. So I'm looking to buy the August 8th 50-55 call spread. I'm going to pay about $1.25 for that. And I think that the stock will hit new highs before those earnings come out.
Okay. All right. So, Rick, what do you notice about this chart?
So it's interesting that we had our past chart and then this chart here because our last chart was talking about how the run-up has perhaps been too far too fast. This next chart would be kind of what the next phase would be if you were bullish, for what you would hope, rather. Not saying it's going to happen or anything, but we had our fast, swift run to the upside. We made new highs. We started seeing bearish divergence on the RSI and momentum start to wane. Then we had our bearish pullback. We pulled back here to our 21-day exponential moving average. That came in around 43 or so, and then price started to rally again. So this is a common setup. Many traders look for this kind of bear pennant, bear flag type of price action. Big rally, short sideways to downward consolidation to a supportive level, then a push back to the upside, and hopefully taking out those original highs. Again, not saying it's going to happen. Very common setup people look for, though. Beyond that, though, 36 is a old resistance level that could be supportive all the way back here as well, too. If price were to continue to drop, it happens to match up with our 63-day EMA as well. If we were to look at volume and standard deviation channels, once again, just a couple of small volume nodes here near about 50 and 46. Could be some spots to watch, though, regardless.
Okay, and then Scott, I want to send it back to you and to borrow a term from the Wall Street Bets Reddit community. Why? Tell me a little bit more about why you see this as a to the moon kind of situation versus the, oh, I don't want to use this term, the ships not going so well for Royal Caribbean.
Well, as Rick said, on that pullback, which the stock came down to 41, 42 area, that had been some prior resistance. So the stock really held there, even though, this is a stock that maybe the Reddits and the Wall Street Bets, folks were behind it. But when it pulled back and got to that prior area of resistance and that held as support, that's what I like about this. And that's what I like about the momentum to break out to new highs.
Okay, so let's talk about the last one on your list today, Lululemon. You've got that in focus today. What's the move here? I mean, it's been an underperformer. It's got tariff risk. Where does it go from here?
Absolutely. And it's really at a make or break. I really believe that this area right here we're at, the 230, 233 area or so, this is make or break. This has been major support for a long time in this stock. So what I'm doing here is I'm selling a put spread. I'm not necessarily looking for a big rally back in Lululemon. What I'm looking for is it pretty much to just bottom out once again. If it doesn't and it keeps going, well, that's why I'm selling a spread. So I always have the risk known to me right going into the trade. So I'm selling this week, very quick trade, the 235, 230 put spread. I can probably collect somewhere between 250 and 275 for that. Max risk I have to that is about 250 if the stock doesn't hold. I just think that we're going to have a little bit of a pivot here again. By selling this put spread, it doesn't necessarily mean that I'm ultra bullish and see stock rallying back big time. I just believe it's going to bottom out here.
Okay, all right, Rick, make or break. That's the chart. Where do you see that in the chart?
Yes, certainly a critical threshold that this stock is near. And if we were to look backward, 226, that's roughly where we bottomed out here in terms of closing prices. The actual intraday low was more like 219, 220, excuse me. But if we went all the way back here, you can see a matching low here, and then our red line here, a frequent low point there near about 245. That's also where we bottomed out during the April tariff announcements as well. We can see, once again, bearish divergence on the RSI. From this period here, price was making higher closes, RSI trending down. Now, this was tricky because it's common for momentum to slow down when a stock heads into an earnings event. And you can see here, this was a very rough earnings move here, big gap down on very heavy volume, showing high conviction. So now price has retreated to within this range that we were discussing here. Our most recent rally was halted at our yellow 21-day exponential moving average. So you can see here now we have this trend line. So around 245 could be the upside breakout point for this one. If we were to also look at our volume studies here, heavy volume at these low levels often is interpreted that a significant low point has been formed. The point of control comes in near 262. Another big volume node here near about 235. A quick glance too at a long-term chart, a 10-year weekly chart here. We are at the lowest point that we've been since about 2020, I believe here, gradually making lower lows here, but perhaps the hope would be stabilizing around this level here. There's maybe not too much to break the fall if we go too much lower from here in terms of price support.
Okay, in terms of price support there. Any final thoughts, Scott, you want to leave us with on Lululemon or any of your other trades today?
Well, that's exactly what Rick just said. It really is make or break here, and there's not a lot below here. Overall in the marketplace, I stand with my thesis that volatility is just too cheap, and the market is just shrugging off everything that is being thrown at it. So, we've got earnings season starting now. That's going to be really huge. We obviously have the Fed coming up. No expectation of any sort of rate cut in July, but it'll be interesting to hear what they have to say, especially after we get all this eco data this week.
Okay, all right. That's Scott Bauer, CEO, Prosper Trading Academy, and Rick Ducat, our lead market technician here on Schwab Network. Thank you both.